Hello guys and welcome back to a new video. So today I want to talk about a question that I received earlier on, and I'm gonna put it on the screen. So this guy is facing this problem that he has a really good analysis on higher time frame. He has a good strike rate, right? He can call levels, he can predict pivot points, rejection points, from where exactly price can reject. But the problem is that when he goes to the lower time frame, he always messes up. Price is like alien to him in the lower time frame, although it's all fractal, right? What we see on the higher time frame, we see it on the lower time frame. But he's not consistent with his executions, thus he's not consistent with his trading, right? So why this is happening? And this happens to a lot of people, including me in the past. One time I switched to swing trading because of this. I was really good at calling levels at the higher time frame, but when I go to the lower time frame, I always don't get it right. Alright? Sometimes price moves in the direction that I want, but I got stopped out, or I let the move passes without me, just because I didn't found a confirmation or an entry, and this is frustrating. So I decided to go to swing trading, and when I call moves on the higher time frame, just take it from there. But this is not the solution. This is just hiding the problem or running away from it. So why this is happening? Let's start with the why. All right. The problem right here is that when we started learning how to trade, all right, either from books or videos, and we study a certain concept, all right, the mentor usually cherry picks the examples. Alright, he or she gonna show you the perfect example or the textbook price action or the reversal of how the reversal happened or the continuation happened, right? So we go with expectation that this is how price should move. Alright, when price moves to my point of interest, this is how it should react. If not, I'm not gonna take anything. I need that confirmation, right? And I'm gonna show you an example later on, but we need to understand that price doesn't need those lower time frame confirmation to reject from a price action, from a point of interest. All right, most rejections, guys, if we go to the chart, most rejections happens in a quote-unquote ugly manner, right? That's what we call bad price action, just because we don't really understand how it works. Let me show you an example. All right, suppose that we have a point of interest, right? Something like this, and let's say that this is the price action, supply and demand, order block, a zone, whatever. Or it can be a fib level. Now, you were here and you did your analysis that price should go, or when price retraces to this zone, it's gonna reject from, alright? And this is the higher time frame again. So something like this, alright? Now let's extend this and let's pretend that this is the lower time frame, right, on the left side or the right side. Now we go with the expectation that price should move like this. We are trading down, right, printing lower lows and lower highs, right, and we tap into that point of interest. Maybe you have some kind of a sweep here before the trend continue, and then we can have a displacement, break of structure, right? This is a common pattern. It can be a trend getting broken. So a lot of perspectives here, right? So the problem right here is that when we go to the chart and we don't find this structure, we panic. We don't do anything. We don't know how to handle this. We don't know where to put our stop loss or entry should be, right? And what happens is that we let them move passes without us. This is why a lot of people can call higher time frame moves and they don't participate on them because they don't know what to do when it happens. They didn't expect that price action. They need more confirmations, and they know that price doesn't need those lower time frame confirmations to reject from a certain level. All right. Some people don't know where to put their entry. All right. That's not the kind of price action that they expected when they don't see the pattern on the lower time frame on the screen, right? So they either enter late, very late, so the stop loss is bigger, so they enter from something like this, right? And then they're gonna take a lot of heat, a lot of drawdown. Price maybe is gonna come back to their entry, all right? And that entry should be their TP from the first place, but since they were so late at waiting for those confirmations, now back to square one, and their TP, right, is above the high that put in the swing high. So basically you are calling for another expansion leg, and it doesn't always happen, right? You can play the move from the low or of the pullback to the high, right? To the high that put in that low of the pullback. Another scenario is that you enter early, right? Price takes you out and then move in your direction once again. So again, why this is happening is that because we have the wrong expectations when we go into the chart, right? We didn't study how price really moves. What you can do is you can go on the chart and study all kind of rejections that happens from the point of interest and notice how many times the pattern on the right happened. Not that often, right? Price can just tap into that point of interest and then shoot from there. V-shaped recovery, we always see that, right? It can be price taps into that point of interest. A point of interest can also be daily low or high, right? Weekly low and high, swing low or swing high, all right? And then price rejects from. It happens all the time. But another variation is that we tap into that point of interest and price just starts consolidating right there. So let's start with the first example. So this right here is a point of interest. First of all, we have the lows from here, and this rectangle is actually an imbalance on the 4-hour time frame. All right, so this is the level that the price can reject from. Now, if we study and we can see that it actually rejected the price, all right, of course it's hindsight, but we need hindsight examples. Now, if we study what happens here at the pivot point, all right, this is on the 5-minute, we can see that this is not the usual lower lows, lower highs. Now the last high getting broken and price started a new series of higher highs and higher lows. Can you see the price action right here? We were consolidating right here, right? And quick move to the downside to take all the lows, to manipulate the lows right here. Manipulation of this move, all right? And then look how price started rejecting. Where exactly do you enter from here? What are your confirmations here? How do you enter? This is the questions that you should be asking for yourself, right? Not looking for that simple reversal pattern every time, because you're not going to see it every time. A lot of times, high probability moves doesn't give you those clean lower time frame structure. It is high probable that point of interest, it has a good chance of rejecting price, but it doesn't have to give you that lower time frame clean entries. All right, so this is one variation of how price pivots. All right, let me give you another example. Suppose that we have the low from here. All right, this is on the 1 hour. We have an order block right here, zone, whatever, a couple of imbalances that will still left open. Price put in the low, so trading to the upside. All right, coming back to take that low, and this is also the previous daily low, so important level inside of these imbalances. Now we're gonna target this, all right, and the imbalance, what's left of the imbalance. So if we study what happens on here, pretty much the same structure. Now, where do you exactly enter from here? Do you wait for this high to get broken? And where do you put your entry? If you put your entry somewhere around here, you could have missed that, right? Price didn't give you that. So you can see that price is missing right here. This is the only obvious high, all right? If you're waiting for those kind of confirmations, and price already left without you. So you can see that. See how price action was before that, and you can see that this is pretty much the same as before. So there is variations other than that pattern, that reversal pattern that I showed you at the start. That was just one of them, and we only learned that. But this is also another variation. We have a consolidation and then manipulation to the downside and a displacement. It always happens, but you also need to study what price does after that. So what happens is that later on, we did came back to that area that we want to enter from. We put in the low, or taking the low, right, balancing the imbalance right here. But look at what happens here. Price rejected heavily from here, right? This was the turning point, this was the pivot point. But look at the price action. It's not something that you see on a video of a concept where a mentor is teaching you a concept and he gives you an example like this. It never happens. He will show you the cleanest examples where price gave you the best entry possible, right? Everything is picture perfect, but this happens a lot. Pivot points like this, right? Consolidation, not even a consolidation that you can easily play the power of 3 or AMD on. This is complicated, right? Consolidation and then price rejected. But there are some ways that you can study this. That is a 5-minute chart consolidation, and if you pull out the GU chart below it, right, this is the same consolidation, right? But notice the lows from here, all right, this one, all right, the low that we're putting here, and notice the lows here. While USD did put in the new low, GU didn't. So this tells you that we might have something right here, but I prefer the DXY. So this is the DXY chart, and we can see this is the consolidation. And while USD put in the low from here, and DXY put in the high from here, respectively, DXY afterward did take that high, alright, but USD couldn't. So what this tells you is that the euro is strong, alright, and we are inside that point of interest. We took in the low, so this can be an area that we can reverse from, and we have these confluences with us. We don't need those break-off structures every single time, those clean trend, downtrend turning into uptrend, alright? This is another variation of a pivot point. So what you can take from this video is, if you're struggling with the lower time frame, you're not looking at the right things, alright? You're demanding the market to give you something that it doesn't happen all the time. And here's something to think about. A lot of times you could have a point of interest that is weak. You're not very sure of it, that price can reject from, and you go to the lower time frame and there is the most beautiful price action you ever seen, alright? There is all you wanted, the perfect entry pattern, and what happens is that entry pattern fails. So you have a low probability point of interest, but you have, I don't know, a clean price action on the lower time frame. And a lot of times you have a high probability point of interest, but the lower time frame is something like this, alright? Always happens. So I hope you like this video. If you have any other questions, you can always DM in my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Happy trading and good luck.